Hey guys, welcome to lesson number 4 on iron condors. This is a very great strategy for people who like smaller risk. Why an iron condor trade is a defined risk trade, as I'll be discussing further in this lesson, which means that it requires less buying power to put on these trades. So if you have a smaller account or you like having capped losses, this is for you. So this was placed right after the strangles lesson because an iron condor is essentially a strangle that has defined risk, which I'll explain here in a second. So when we sell strangles, we pick 2 points that we want the stock to stay between. We're doing the same thing with iron condors. We just have defined risk. So let's dive into it. So when I say that all because you'll see that's very similar to a strangle. It's just a tad different on buying power. So first off, you're looking. It works best in markets that are slower markets or sideways markets, aka markets that aren't shooting up or down. You want a very slow moving market. It works best for people who want slow, consistent profits, but they also can't handle unlimited risk, either because they have a smaller account and they have to restrict their buying power, or their risk preference. They don't like undefined, potentially unlimited loss trades, and they don't like the idea of a stop loss. They want iron condors, which have the stop loss built into the trade structure. Next, cons of the strategy is because it's defined risk trades, the same for all defined risk trades, it takes longer to make a profit. Because we have so many different options legs to make up this trade, which we'll see in a second, all of it working together, it takes longer to realize a profit. And so because of that, it takes a while. You have to be in the trade longer, be exposed to the market longer in order to see the same profit you would with, let's say, a strangle or just selling a normal put. Next, you need full margin approval to do this trade. So again, if you're trading with Tasty Trade, that'd be the works account. But unlike other strategies we discussed, it takes a lot less buying power. So for ES, depending on the strikes you pick, we're talking about a $2,000 buying power usage. And in SPY, we're talking about a $1,000 buying power usage. So a way smaller than 10 and 20,000 that we've been discussing. How is the strategy constructed? Well, we use a put credit spread and a call credit spread. These are two things looking at it together. Here's another way of putting it. We look at the range we want the stock to be in and we put some extra things on it. So let's say we're doing our call here and our put here, meaning that we want the stock to stay above this level and below this level. This is what a strangle would do. Then we come back after selling these options and we buy a call above it and we buy a put below it. This defines our trade. This adds a set risk to these positions. So now we have the ones that we sold, and then we go out a tad further and we buy those options to define our risk. All right, oops, I didn't reset this. Let's go back to dashboard. Okay, so to define our risk. And so that's what's called a put credit spread and a call credit spread. When you sell a call first and then you buy a call, this is a call credit spread. When you sell a put and then buy a put, this is called a put credit spread. Put credit spread to make money when the market goes up. Call credit spread to make money when the market goes down. Thus, by staying in this level, we're making the max profit. When we get outside of these ranges, that's when we start losing money. All right, so that's what that is. Combining a put credit spread and call credit spread, like I just mentioned, makes money when it stays in between two zones. How far out in the future do we go? Well, 45 days to 120 days is recommended. So here's what the profit graph looks like. It's the same thing for a strangle, except when you go down a bit further here, then your losses are capped. So these will eventually flatten out to the downside to give you a defined risk on the downside. Because we bought those options that are further out. So early management, how do we manage this trade? Well, Tasty Live and all the metrics and stats that they have tells us that it's best to manage an iron condor at 21 days until expiration, which means there's 21 days left until the trade expires. This is typically best for an iron condor because it already has a stop loss, a predefined risk built into the trade. And so because of that, we don't really need to add a stop loss to it. Instead, we're looking at the time component and reducing risk by reducing the time that we're in the trade. Next is take profit. So typically, just like a strangle, we look to take profit between 10 to 50%. However, if we're looking at Tasty Live Mechanics, if you go through all their research, the research shows that, again, it takes longer with a defined risk trade to hit that profit. So when you're selling a strangle, you're typically targeting a 50% return. But when you're selling an iron condor, it's best to do a 40% take profit. They learned that 40% is going to be equivalent to roughly the 50%, not in money return amount, but in about the timing and the risk and all that. You want to target about a 40% return when you're trading an iron condor. So what are some best practices for this? Well, if we use the Tasty Live Mechanics, we're looking at a put credit spread with a 16 delta defining our main range with 5 delta wide puts. So that gives us a larger risk but still defined. And then we have 45 days until expiration. So we go 45 days into the future. We close it when there's 21 days or less left. And then we take about 50 to 40% of the initial credit. Again, 40% is recommended. Now, again, if you want this document, click down below. You can follow the steps to automate an iron condor strategy, but I'll just walk you through the steps since I'm here with you right now. So first thing we're going to do is click on Create an Auto Trader. Connect our account. And guys, remember, something that I do for you is I do all the heavy lifting. So you can click on Pick an Auto Trader, and I preloaded under our passive income strategies the wide iron condor strategy that Tasty Live has all their metrics for, that has a really high win rate and does great, and is right here. And you can define what you want to trade it with: SPY, SPX, ES, etc. So just like that. Now let's actually reset it from scratch and do it. So let's create the iron condor. So again, as always, I preload all the best practices for you. If you know how you like trading an iron condor, you can do it that way. So MES right here. Again, you can define what you want to do. So just like that, let's say MES is great for smaller accounts. So I'll just start there. 45 days until expiration. This is the best practice. 16 delta for our normal ones, and then our further ones out is the 5 delta. So this looks like exactly how it's structured. Again, that is an iron condor, all built in for you. Next, how often do you want to enter the trade? Well, that depends on you. But again, this is set up for once a week on Wednesdays. Again, if we want to do it multiple times a week, we'll click on day, Monday, Wednesday, Friday as the days we want to trade that on. Perfect. Next is take profit percentage. Again, 40% is best practice. Stop loss we can add, but we don't necessarily need because it's already defined risk for us. So we'll add 21 days until early management. Again, no stop loss, that's fine. Buying power allocation. How much money do I want to put into this trade? Or I should say, how much money do I want to allow the auto trader to trade with? AKA, what amount of money will it cap out at? It'll keep placing trades until what amount? So again, we have a defined risk trade, so it takes a less amount of buying power. So I'd say $5,000 is probably more than enough for this trade. Just like that, you can see here it takes about $200 per trade. I'll make about $60 per trade based on my profit percentage. And here's about my risk per trade based on the width of that trade. So that's kind of what I'm looking at. That's how I set up an iron condor auto trader that will trade for me. And that's exactly how it's structured. Again, so if you're looking for a strategy that makes money when a stock stays between a certain range, but you want to use less buying power and you want to find risk, an iron condor is the strategy for you. Also, more times than not, because an iron condor is a defined trade, this is the go-to strategy for people who do zero DTE trading. So people who like trading on like every single day. And so what they do is at the beginning of every single day, right when the market opens, they will sell a zero DTE iron condor. This is actually what Tasty Live has been doing and testing for a while now, and they actually enjoy it, and they're having win rates of upwards of 90%. So if you want to do that, here's the best practices for that. I should kind of share that. First off, I want to say again, if we go to pick an auto trader, you can actually go to zero DTE strategies and use their iron condor strategy, the zero DTE one. So I'm actually going to set this up with SPX. Click on SPX here, and I'll show you what that looks like if I go back. Here's all the best settings. So we go SPX. We trade 0 days until expiration. The iron condor is structured based on dollar amount away from the stock price. So $20 away and then $40 away. So that creates that structure. We enter every day. We can also avoid FOMC days. So not to enter on FOMC days. We can do a take profit percentage of 15%. They said 10 to 30% is good on the 0 DTE trade, so 15% is preloaded by default. We also have a 200% stop loss by default. Next, you just put in the buying power you want to use, and that's how you structure a 0 DTE iron condor trade, which a lot of people on here do. So it's a very great strategy for those of you who like to be more active, but also have defined risk. So again, that's how you use iron condors for both long-term and short-term strategies. Again, I hope that makes sense. If you have any questions, let me know, and I'll see you in the next lesson.